Good evening, everybody. Sorry for the delay. Webinado glitches as usual. Tonight we've got the great pleasure of Mark Helweg with us, and he's going to show us a very unique strategy or indicators that allow you to get into very strong option trades with a high degree of accuracy. So I won't take up any more time. Mark, welcome to the Candlestick Forum. We're anxious to see your information.
Thank you, Steve. Great to be back here. And hello, everyone. Sorry for the delay as well. Steve and his team are very patient with getting this technology up and going on my side. But it's great to be here, everyone. And with Steve, with your permission, I'll go ahead and dive right in for the sake of time here.
Go right ahead. Yes.
Okay, thank you. Everyone, welcome to the explosive traffic pattern for trading options. This is a really interesting pattern that we discovered with a number of years ago, so I'll share the background story, and it's a pattern that we see happening quite a bit over time. So if you know what to look for, it's great for trading options. I'll show you the background story, and then I'm going to show you examples of real trade alerts that we published and real trades that I've made using the strategy as well. So for those of you who don't know who I am, I've basically spent my career as a hedge fund manager, still am right now, and have focused on technical analysis as a way to develop trading indicators to forecast where prices are likely to go, and also develop quant models as a way to generate, price action driven buy and sell signals as well. So that's my background essentially. Let me cover some standard risk disclaimers. Trading involves a high level of risk and is therefore not suitable for all traders. Before deciding to trade, you should carefully consider your trading objectives, level of experience, and ability to tolerate risk. Make sure you always spend time understanding the risk of trading. It's really important to start with that. And just remember, it's something that every trader has to manage. So it doesn't necessarily have to be a bad thing. It's just more or less a reality of trading and investing. Also, second disclaimer here is hypothetical risk disclaimer. CFTC Rule 4.41 simply states that hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. So in today's presentation, I'm going to show you one of two things: either real trade alerts that we published ahead of time, obviously not knowing how they'll turn out. We didn't have the benefit of hindsight with these, but I'll show you real trade alerts we published, and also I'll show you some real trades that I've made as well with this pattern. So let me give you the background here. This all started for us back in January of 2017 when we launched a new options trading alert program. The program was designed to beat the markets through probabilities using a number of different strategies. So each week what we did is we broadcast roughly 50 to 70 option trade picks. And after our first 24 months, we decided to do a deep dive on our results to see if we can learn how to make the service better, learn from some of the either good or bad trades that we published over time. So here are the results after 24 months. Now, we had a total of 1,027 option trades that made over 100%. We had 365 trades that made over 200%. We had a total of 2,383 winning trades, and then we had, if you added up all the winning trades and losing trades, we were up 84,994%. Now, it's important to understand how we arrived at that. So the strategy had three different potential exits. We had two profit targets, and we had one we'll call closing trade exit as well. So for the results here and results that we use to track our service over time, we use what's called optimal exit or max profit exit, which means that if, for example, profit target 2 was up 250%, and let's say the end of trade exit was up 300%, we're going to use the better of the two. So we use the end of trade exit, and that gives us an ideal, kind of the upside potential of the program, but obviously each individual profit or each individual's trade profits is going to depend on where they end up exiting out of the trade. So this is what the equity curve looks like. Essentially, you'll see that we weren't always up. We had some down periods as well. We had some down weeks and a few even down months, but overall it was pretty good results. So we were fairly pleased with our results, but at the end of the day, we had one really big problem with the service, and that is that most normal traders are not able to take 50 to 70 trade alert picks each week. So we had a lot of traders come up to us and ask us over time if we could just give them the best 3 picks or the best 5 picks each week. And to some extent, that's really what we're all after, right? We're all after the best trades, but on the flip side of the coin, that was really good. It was a good challenge. People were saying, do some homework, do some research, see if you can find some commonalities between a lot of your big winning trades. And so that's exactly what we did. We decided to see if a lot of the big winning trades had some things in common, and we made an interesting discovery. So the breakthrough came when we noticed similarities among many of our big winning trades. We found that when three market conditions appeared, the stock would often experience a big price move. The three market conditions were like hidden clues that a stock was about to either take off to the upside or drop like a rock. For example, one example here in late 2017, when the SPDR DIA ETF experienced the three bullish market conditions, it ended up taking off to the upside. So we represent that on the chart with three dots. So think in terms of three lights or three dots. Each one is representing an individual condition that we're tracking. And what we're looking for is all three conditions to fire off either bullish or bearish at the same time. So in this case, for the DIA, which is the Dow Jones Industrial Average ETF, all three conditions fired off bullish at the same time. And this caused us to recommend to our traders to buy the DIA 235 calls, which jumped in value by 338%. So if you're new to trading options, you want to buy call options when you expect a stock to go higher. So in this case, I include two account references. A lot of people don't understand what that means. What does that mean to be up 338% for these calls? Well, for a smaller account reference, like for example, if you bought $200 of these call options, that would grow to $876. That's what up 338% means. If you had a larger account and you bought $1,000 worth of these calls, then in this particular case, this would mean that $1,000 would go to $4,380. So that's what that 338% means. I'll include these small account and larger account references for those of you who want to know what the dollars and cents translation means. Another example in March of 2018. By the way, I'll show you some recent examples here right at the end. But this is us going back in time and studying our real published trade alerts to find some commonalities in the winter. So I'm showing you these examples for that. And then again, in a bit, I'll show you real examples recently as well. So you'll see that this is a pattern that literally happens over and over again throughout time. So then in March of 2018, when Wells Fargo experienced the three bearish market conditions, WFC ended up dropping like a rock. So now the conditions can not only be bullish, and when they're bullish, they turn the light green, if you will, but they can also be bearish as well. So these are the exact same conditions now, but they're all flashing bearish, and the key here is the timing, all at the same time, represented by the three red lights, or three red dots in the chart. So in this particular case, this is another real trade alert we published to buy the WFC 56 puts. Those end up jumping in value by 515%. So $250 grows to $1,540, or $1,000 grows to $6,150. Then three conditions, were basically like, if you want to think of it this way, three distinct patterns, which we developed into the three light pattern or the traffic pattern. So when the three market conditions triggered at the same time, the stock would experience oftentimes a big price move. Another example, like JP Morgan Chase, when it had these three bullish conditions, the three green dots, then it ended up jumping in value. You can see here the three green dots, timing of that flashed at the same time. We recommended to our traders to buy the JPM 98.5 calls. Those jumped in value by 568%. So what does that translate into? Well, $200 grows to $1,336, or $1,000 would grow to $6,680. Another example, Citigroup experienced a bearish traffic pattern. Remember, they can not only be bullish, but they can also be bearish as well. And in this case, we have the three red dots, and this caused us to recommend buying the Citi 73.5 puts for our traders. And those ended up jumping in value by 400%. So $250 of these puts grows to $1,250, or $1,000 of these puts would grow to $5,000. Or another example, when UPS had a bearish traffic pattern, then we saw all three conditions fire bearish at the same time. We recommended buying the UPS 111 puts. Those jumped in value by 413%. So 250 again gross for a small account reference, $1,282, or if you have a larger account, you bought $1,000 of these puts, that would grow to $5,130. So when the traffic pattern appeared, stocks would oftentimes have big moves, and when that happens, then options have the strong potential of jumping in value because options can make big profits when stocks experience big moves. Buy and call and put options is the perfect way to cash in when stocks are likely to make big moves. So we decided to name this strategy the traffic pattern strategy or the three light strategy. Trading system flashes green or red to signal when a stock should go up or down. Now the traffic pattern not only forecasts direction, but it also predicts when a big price move is likely to happen. And this is the interesting part of this pattern because most patterns we know about, they're forecasting which way prices should go, either to the upside or the downside. But the traffic pattern uses what's called confluence to not only forecast direction, but also to forecast the possibility of an explosive move in that direction. And big price moves are what make options really explode in value. Now, inevitably, over the course of your career, if you're trading long enough, you're going to run into some crazy stories. And this is one of mine, but as a young trader, this is really the first time I ran into the idea of multiple patterns. So usually up until that point, I'd been studying different things, like head and shoulders patterns, certainly candlestick patterns or geometric patterns, pennant patterns, double tops, things like that. So I'd run across that, and I knew that patterns could be used to forecast prices, but what I had not come across really was the idea that multiple price patterns could actually increase the explosiveness of a move. So this is a true story from early on in my career that I came across from a man who was my father's friend. So he was senior to me by about 30 years, and this was back in the early 90s. He was telling me this story, but it's a great story, and this is really what turned me on to my studying multiple price patterns at the same time. And the story is what I call the power of multiple price patterns, what I learned from a genius convicted felon. So back in the early 1980s, and this is this man who was a friend of my father's who became a friend of mine because we both loved trading, but he was telling me the story about his career, and this man responded to an intriguing ad about a highly secret trading strategy in the back of a magazine. So this was pre-internet, and back in that time, you would look in the back of magazines for advertisements on trading strategies or trading education, things like that. So intrigued by this ad, this is the crazy part of the story in my mind, but my friend, this man, convinced his top client to spend $25,000 to buy this secret trading strategy. Now, back in the early 80s, $25,000 was a lot of money. It's a lot of money today, but it was a lot of money back then. You could buy a new or a nice Mercedes or BMW for that amount of money back in the early 80s. But he did that. They decided to buy the strategy. And in order to pick it up, they had to travel to Dallas, Texas to meet the creator of the strategy to pick up the special trading strategy. So they wired him the $25,000. They hopped on a plane, traveled to Dallas, Texas, and this is where the story got really strange. So they got out of the plane, they rented a car, they traveled to the address, they pulled out a map and drove to the address that was given to them. And the first thing that struck them was that it's a very normal, modest part of town. So I think they were expecting to arrive in, the really nice side of town, but it wasn't. It was just very, very normal. And so that was the first thing that struck them, I guess, in the course of going to meet this creator of this strategy. But the address was correct. They got out of the car and they started walking up to the door, and they knocked on the door, and this mad scientist guy with unkempt hair and a sweater answers the door. And instead of inviting them inside, he asked them if they wouldn't mind meeting him out in the garage. So I would think after spending $25,000, the guy would invite them inside, but he chose not to. So they walked outside around to the garage door opens up, and this man walks into the garage from inside the house, and the first thing he says is, "I just got out of prison." So my friend was inside. He was freaking out, thinking, "What have I got involved in? This is terrible." So this is where the story got interesting. But this man was not, as the story goes, a violent felon or anything like that. It turns out he was serving time, as the story goes, because he helped the Hunt brothers corner the silver market by creating complex eavesdropping devices that they could use to listen to conversations going on in a different room or different building. So he was convicted of that, sent to prison, and instead of wasting time, he decided to focus his time on cracking the code of the markets. So This genius convicted felon man researched all the charting greats, including Fibonacci, Gann, and Elliott, and what he discovered was really remarkable about the markets, and that this highly intelligent man observed that certain chart patterns have predictive value. Now, we know that, obviously, especially those of you who are following Steve know that candlesticks have predictive value, candlestick patterns, and we know that other chart patterns can as well. But what was really interesting is that he discovered that multiple chart patterns combined together could potentially produce superior results. So it's not only a potential of improving the forecast prediction, but also, I would say even more importantly, that explosive factor. So it's almost like when you see 1, 2, 3 things all happening at the same time, the explosion of the move oftentimes could be much greater. And so I thought that was really interesting. So the accuracy, the explosiveness of these multi-pattern predictions, these incredible forecasts increased dramatically, and that's what he discovered in his report. And I remember as a college student holding this report, the $25,000 report in my hand, I was really intrigued to read through it and see what it said, but that's essentially what it said. The traffic pattern today follows these same principles of combining multiple price patterns together and looking for these things to fire off at the same time. With our strategy, we're leveraging multiple conditions that signal when a stock is likely to take off to the upside or drop like a rock. Another example here of that is the 3 bullish traffic conditions lining up for Ford, and when that happened, the stock ended up jumping in value. So here's the 3 green dots, each representing a different condition. When all 3 of them fired off, then Ford jumped in value, and we recommended when we saw that for our traders to buy the Ford 12 calls. Those jumped in value by 177%. So $100 would grow to $277 of these calls, or a larger account reference, $1,000 would grow to $2,770. When the 3 bearish traffic conditions lined up for the SPY, the ETF sold off hard. So not only can they be bearish, we know, but the same 3 conditions can also fire off at the same time and be bearish. So this is the three red lights you see here on the chart. This is another, all these are real trade alerts we published. We recommended buying the SPY 274 puts. Those jumped in value by 488%. Again, 250 grows to 1470 for a small account, or $1,000 would grow to $5,880 for a big account. Another example, when the 3 bearish traffic conditions lined up for 3M, the stock ended up plunging. So here's another example. We saw the 3 red dots. These conditions were firing off bearish at the same time. We recommended buying the 3M 237.5 puts, which jumped in value by 532%. So 250 grows to 1580, or $1,000 would grow to $6,320. Now, if I'm here today, and by the way, I haven't gotten questions yet. I'll try, just for the sake of time, because we got a late start, I'll try to hit those at the end if you don't mind. But let me just talk about what are the 3 patterns. So if you want to follow this pattern yourself, or these 3 patterns for finding call option and put option trades, let me show you what to look for. So these are the exact 3 patterns behind the traffic pattern strategy. I'm pulling the curtain back so you can use this in your own personal trading if you want to. So the 3 patterns that we observed before many of our big winners work together to make up what we call the traffic pattern. So here's condition number 1. We call this surging momentum. We're looking for stocks that have a significant increase in upside or downside momentum. Surging momentum must be present in a stock as the first condition for the traffic pattern strategy. Our real breakthrough came when we discovered predictive momentum patterns. We discovered through empirical research that initial momentum surges were very difficult to predict. Maybe the accuracy would be around 15 to 20%. Therefore, we don't even try to predict what we call initial momentum surges. Next, we discovered that continuation momentum surges could be predicted with much greater accuracy, upwards of 70+%. Therefore, the traffic pattern ignores initial momentum and only focuses on what we call continuation momentum. So let's take a look at this. I'll see if I can use these drawing tools here. All right, so this is, let's highlight. I'm going to use the pen here. On the top here, you can see that this is a daily price chart of a stock. So it's simple, normal daily price chart. On the bottom of my chart is a simple momentum indicator. So those are the 2 things we're looking at. And the thing to notice here, if you look at the momentum indicator, there's a little bit of a cycle action happening here. You can see if you look closely that there's a cycle working through here. And what we're looking for essentially here is Number one, we want to see an initial momentum, and I'll just go ahead and label this as number one. And then that's not what we want to trade. Too hard to predict. We can't see that coming all the time. But number two over here, we're looking for that continuation surging momentum. So this is something we found that is a lot easier to predict. And in this particular case, you can see that where the green arrow is, this will meet our condition number one and light up the first green light. So that's the green bullish condition number one. Obviously, for the bullish side, we're looking for positive bullish momentum. And then this is the example here for condition number one. So let's move on to condition number two. This is just plainly a cycle swing. Then we're looking for a well-defined cycle swing in the direction of the surging momentum. We found that surging momentum oftentimes supercharges cycle swings. The cycle swings define the price action that traffic patterns trades. The cycle swing must be present as the second condition for the traffic pattern strategy. Now, if you're trading options, it's really important if you're an option buyer to always trade in the same direction as the cycle swing. Because if you don't, you're going to lose money on intrinsic value and on time value. So here you can see right here labeled with the green arrows that we want to start ideally to buy the call option as close to the cycle low, and we want to get out in theory as close to the following cycle peak. So this not only defines condition two, the upswing, which will light up the middle green light here for the traffic pattern, but it also defines the time frame that we want to be in the trade. We don't want to get in early on the previous downswing. We don't want to overstay our welcome on the following downswing. We just want to be in this trade where the green arrows are labeled here when the upcycle swing occurs, and that's when, again, condition two happens, and that defines when we want to be in the trade itself. Now, condition number three is really what we call a peaks and troughs trigger. The third condition is really more of a trigger, which enables us to get into swings when they start. The trigger is designed to detect the beginning of a swing at the cycle low and the cycle high. So this is our custom trigger here, you can see, and essentially, again, the design of the trigger is to try to help us get in as close to the cycle low as possible. Now, for those of you, obviously, who follow Steve, you guys will know that there are candlestick reversal patterns that can also be used for this. We have a number of indicators, including the one you're seeing here and others, that help us time this trigger to help us get in and identify potentially the starting point of a traffic pattern upswing or downswing. But again, you can use different patterns, including candlestick reversal patterns as well, and they can be very effective once you study and know how to use those. Condition three, when we see the trigger telling us when the potential bottom is in place, that turns on the final green light. And with all three conditions lining up, green, this gives us a traffic pattern bullish confirmed signal. So here's a textbook bullish traffic pattern. You can see the top continuation momentum turns on the top green light. The middle upswing, upcycle, turns on the middle green light. And the bottom trigger located where the green arrow is, that gives us the final trigger of the final green light. All three of these together, when the timing is there, when they all fire off, they give us three green lights. They give us a confirmed bullish traffic pattern. And when that happens, we're looking to buy call options. And if you're new to trading options, you want to buy call options when you think a stock is heading higher. Now, I've shown you some examples of bearish traffic patterns. So traffic patterns can not only be bullish, but they can also be bearish as well. When you think about these conditions, they're just the opposite of the bullish conditions. So think about just the opposite here for the bearish traffic pattern forecast, well, again, which is forecasting that a stock is likely to drop. So for bearish traffic patterns, condition number one we're looking for is just the opposite of before, which is negative downside continuation surging momentum. So you can see here, I'll open up the pen again. You can see here, if you look at the chart, the beginning of the chart, there's a big momentum down move. Now this is initial momentum. We don't try to predict that because it's a lot of times it comes from nowhere and it's too difficult to predict. On the right side here, you can see the first down surge. I'll label that as number one. And then you can see a follow-on down surge. I'll label that as number two. The follow-on or continuation down surge here is what we're after. And when we see that, that gives us our first bearish red traffic pattern, and that satisfies bearish condition number one. Now second, we're looking for just the opposite of before, a negative or bearish cycle swing. You can see here this is labeled by the red down arrows. In this particular case, this when we see this, this is not only defining condition number 2 to the downside, but also defining the lifespan of our trade. So we want to get into the put option as close to the cycle peak as we can, and we want to get out of it as close to the following cycle low. So this lights up our second red light, middle red light, and then just the opposite of before, we have now a top trigger, and this is designed again to potentially tell us when the downswing is about to start. So when we see the top trigger using our custom indicator, this is telling us that we have a potential downswing that's now in motion, and that's when we go in to buy the put options. So when all three triggers line up, we get a confirmed bearish traffic pattern. Now here's all three of the indicators stacked on top of each other. Pull out my pen just to go over this one more time. Remember, first thing you see is the initial momentum and then the continuation momentum. You want the number 2, continuation momentum. You want the down cycle lining up with that. And then lastly, you want the top trigger where the blue arrow is. All this together is giving us a confirmed bearish traffic pattern, and that's what we want when we buy put options. So when bearish traffic patterns are confirmed, we're looking to buy put options because if you're new to trading options, you buy put options to profit from falling prices in stocks. So when traffic pattern signals occur, they seek to forecast not only a predictive direction, but also a big move in the stock. For example, when Capital One Financial had all three bullish conditions, a bullish traffic pattern signal is generated. So this is what I consider to be almost a textbook traffic pattern right here. So this is Capital One. This is a real trade alert that we published, but you can see here just a beautiful continuation surging momentum on the top, beautiful upcycle in the middle, and then a well-timed trigger, bottom low trigger here in the blue location of the blue arrow. This lights up all three green conditions, and this was a real trade alert that we published recommending the Capital One Financial 87.5 calls. Those end up jumping in value by 480%. So if you had $100 of these calls, that would have grown to $580, or $1,000 of these calls would grow to $5,800. When IBM had all three bullish conditions, a bullish traffic signal was confirmed and IBM options went up in value. Now I wanted to include this example as well because you can see here that the follow-on surge was not as big as the initial. So the initial surge, you can see it was really big, but then it kind of fizzles out a little bit. You see momentum starts to almost go sideways here. This is a confirmed bullish traffic pattern, but it doesn't pan out or do nearly what the initial surge did. We're not complaining. It was still up 111%, but it kind of fizzled out a little bit. So not every winning traffic pattern trade is going to be an out-of-the-park home run. A lot of them are small, like 25% or 50%, or in this case, 111%. Now, if you look closely, something interesting is here. This is the traffic pattern trade that we recommended, but if you look to the right, there is actually a second traffic pattern trade. So if you're interested in tracking this yourself, don't forget to look for a second one that might pop up right after the first one. So this had a beautiful continuation momentum that would turn on the top green light, beautiful upswing, and then lastly had a very nice two-bar trigger here. So that would have had a great timing to get into this. We actually missed this. We weren't looking for this, but this is a great example of a second continual or second a traffic pattern trade that happens right in a row. So be sure to watch for that if you're looking for this pattern in your personal trading. Going back here, sorry, I missed a slide here. Norfolk Southern, this is another example. This is a textbook example again. All three bullish conditions, a real trade alert that we published recommending the NSC 130 calls. Those jumped in value by 572%. So again, small account reference, 250 grows to 1680, or a larger account reference is $1,000 grows to $6,720. Now, traffic patterns can forecast when stocks are likely to drop as well. We know that. I showed you the bearish examples. Here's a couple more of those. So this is Aetna, had all three bearish conditions confirmed. We knew it was likely to sell off. And this is another one of those that kind of fizzles out a little bit. Still profitable, still confirmed traffic pattern, but not as big of a move as some of the other ones that I'd shown you. So this is not bad. Again, all three bearish, continuation downside momentum, down cycle swing, and the top trigger. We recommended buying the AET 175 puts. Those jumped in value by 202%. So 250 of these options would grow to 755. $1,000 would grow to $3,020 in this example. Another example, Tata Motors had all three bearish conditions, so we were confident it was about to sell off. This is one that actually fizzles out a little bit. I want to include a downside example of that. So you can see here that there's a strong initial down move, but the follow-on down move is pretty weak, and you can see that playing out in the cycle. The cycle hardly even swings down here. So this is an example of a traffic pattern that was confirmed, but it doesn't move as far as we would like. So we're not complaining, still made 120%, but not nearly as profitable as some of the other bigger traffic pattern examples. So $250 grows to $550 of these 26.5 puts, or $1,000 would grow to $2,200. Norfolk Southern had all three bearish conditions confirmed, so we forecasted it would drop. I wanted to include this example as well. Now, when you're looking for traffic patterns, sometimes the timing is going to be off. So the timing is really off in this example. It gets in a couple of days early. So you can see here that Norfolk moves against it for about 4 days, and then finally goes down in the direction of the traffic pattern. So this erodes part of the profit potential. And traffic pattern timing, you're gonna have them when they fire early sometimes, or possibly even fire late. So it's possible to be off in your timing. This is again another trade alert that we published recommending buying the NSE 130 puts. So still happy with the trade, but not as big as it could have been had we had good timing there. You get the idea. 250 grows to 537, or $1,000 grows to 2150. So let's talk about traffic pattern essentials here. If big moves in stocks can make big money trading options, and if our risk is always limited to the price we paid for the option, then it's possible that the traffic pattern may be one of the best ways to swing trade the markets. In fact, this breakthrough strategy may be one of the best ways to trade options that I've come across. Now, I'm not a big superlative guy. I don't like to say this is the best thing ever, but I'll tell you why I like it. If you're ever buying options, you want to make sure that you always are trading in the direction of the cycle. So write it down. Always, 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 when you're buying options, trade in the direction of the cycle. Otherwise, you're going to get beat up in time value and intrinsic value. And this not only does that, the strategy is designed to trade in the direction of the cycle, but it also is being picky. It's finding those supercharged cycles that have the benefit of strong momentum as well. And the best part is traffic pattern is very simple to trade once you understand it. Now, let me show you a series of real trades. My team and I are always looking at a lot of different strategies, a lot of different ways to trade the markets. What really convinced us of the power of the traffic pattern was a series of real option trades. Ironically, the worst trade in the group was not the traffic pattern trading signal, but all the best trades were. The traffic pattern trading signals were the ones that were the most popular. So here's an example of those, and this is just a snapshot of a lot of trades, a lot of option trades here, each risking approximately $1,000. And I would say this is a period that's very unusual. This is not normal at all. But you do see this sometimes. You do see like a flurry or like a rainmaker event where you see a lot of real traffic pattern trades. Now, let me first point out the obvious here. The obvious thing is that there are some losing trades here. You see in red. Now, one of them, and by the way, you will have losing trades just like in any strategy. One of them is down here. It's Oracle. So all of these are risking approximately $1,000 per trade. And Oracle is a trade where I couldn't have been more wrong. So they're buying the calls. This is not the traffic pattern strategy, but actually another good strategy. And as it turned out, Oracle had a surprise earnings announcement that week and ended up losing $1,000 on the trade. And that's good news. And you may say, Mark, how in the world do you see or call losing $1,000 good news? And I'll tell you why. Because that was the biggest down week in Oracle in history. Now think about that for a second. The degree that I was wrong was I couldn't have been more wrong in the direction of Oracle. I was wrong to the maximum degree. When you think about the way life punishes us, most things in life, if you're wrong to an extreme degree, it could get downright dangerous. Like if I get in a really bad traffic accident, people can get badly hurt or killed. Or I'm in surgery. If things go dreadfully wrong in surgery, as a doctor, patients can die. So in the markets, when you're wrong to a high degree, you can incur some significant losses. But when you buy options, you're always limited to the price you pay for the option. So if you look at this trade, I've risked $1,000 approximately in all these trades. The most I could lose, regardless of how wrong I was, is $1,000. Now here's the good news. So that trade, funny enough, was one of the biggest movers for the week. But look at the first winning trade here. This is buying the UVXY calls. That made $3,024 in profit. So now I can take part of that money, pay off the $1,000 loss, and I'm still left after paying off that loss with $2,024 of profit. So that's the beautiful thing about buying options, is that you can make a lot more upside potential than you are risking on the downside risk or downside of losing. And so I paid for that. First trade pays for the $1,000 of loss with Oracle and then ends up making an additional $2,024 of profit. But it gets better. So these are all traffic pattern trades that just so happen to fire up at the same time. So second one here, UPS ended up making $3,852. And that was buying the UPS 110 puts. UNH, United Health Group, that was buying the 225 puts, made $4,555 of profits. All these, again, are risking approximately $1,000 per trade. AT&T buying the 37 puts made $1,885. The SPY buying the 273 puts made $4,592. You get the idea. Now, SDS, this should have been a couple $1,000 winner. It was an $84 winner because I got completely gouged on getting into the option and getting out of it. So I should have known better. As a professional trader, I'll never trade SDS options again. I got gouged badly on it. Burned me once, shame on you. If I trade it again and get burned again, that's my own fault. Procter & Gamble, nice winner here, $3,024. You get the idea. Navistar, $1,200. MasterCard, $2,900 winner. Johnson & Johnson, $2,700. These are all risking approximately $1,000. Home Depot made $2,225. Goldman Sachs made $4,400. I ran out of room, so I had more. There's Apple, which ended up making about $3,500. The Dow Jones Industrial Average, $2,800. And then Facebook, about $3,600. Then GLD, about $3,600 as well. So there were a lot. This was a rainmaker time frame for traffic pattern trades. And for my team and I, because we're always looking at a lot of different strategies, this was a real attention getter for us. If I would have risked $2,000 in each one of these trades, that would have almost been a $100,000 a week, which is not too terribly bad. So after this week of trading real money, we really began to understand the power of the traffic pattern strategy. Now, let's keep it real here. Notice there was a 99% losing trade. You can't lose more than your premium, but there was a big, we'll call it 99% losers. This was not a traffic pattern trade in this example, but one of our other trading strategies, and it's a good strategy, but it's important to understand you will have losing traffic pattern trades too. Like any strategy in the world, there will be losing traffic pattern trades. There's no strategy in the world, Steve will tell you this as well, that's going to win all the time. So winning or making money at trading is always going to be about making more money from your winning trades than you lose from your losing trades. And it's okay to lose 99% of your premium when you're able to make larger winners like plus 196 or plus 434. And that's what the strategy is. It's limit the losing trades and it's targeting the big winning trades. So let's talk about how you can trade this. There's really two ways. If you want to trade the traffic pattern signals, you can do it yourself. And I would encourage you to do this. If you're a do-it-yourselfer like me, I've given you the 3 patterns that you need to follow. And I would suggest building a watch list of a number of optionable stocks that are pretty liquid, and then just put the time in every day. Just track it, and the more time you put on it, the better you can get. So that's what I'd recommend doing if you're a do-it-yourselfer, if you really enjoy studying price charts like I do. By all means, you can do this, and the more practice you do it, the better you get. I think the more successful you can be trading this pattern. So if you're like me, you like to do it yourself, by all means, I recommend you do it. I encourage you to do it. Now, if you're like my wife says, the last place in the world I want to be all day long is in front of my chart computer. I want you to tell me, Mark, when you find these, that's good news as well, because we actually are using our professional hedge fund research team, and we built out some scanners and some tools that help us monitor the markets and find these traffic pattern trades in real time. So our professional trading desk team monitors approximately 150 hand-picked stocks every day, so you don't have to. We expect to find approximately 5 to 10 traffic patterns each month sent right to your email box, or you can also sign up for text messaging as well when we find these. And when we send out a text message or an email, there's no gray area. We're going to tell you the exact option to buy, including the buying the stock symbol Amazon, strike price 37.50, type of option, call or put, and then the expiration date is included as well. So there is no gray area. It's literally simple enough for my 8th grade daughter to trade it. And best of all, we're going to target traffic patterns like this. This is a real trade alert, textbook example of Capital One Financial. We broadcasted this to our traders who are following us, recommending the COF 87.5 calls, which jumped in value by 480%. So $100 of these calls would grow to $580. For those of you who want that translated, $1,000 would grow to $5,800. And here's the good news. A lot of people are telling us, hey, we may now be in a bear market. So what do you do then? Well, the good news is then we focus on finding bearish traffic pattern trades. And I would say the majority of the ones we found this year are bearish. So this is an example of a bearish put option trade, 3 red dots here, and we recommended buying the SPY 274 puts. And those jumped in value by 488%. Now that's not all. If you're interested in following my team's traffic pattern trade picks, we really want you to master the traffic pattern strategy. So I created a special report called Traffic Pattern Exposed. And in the special report, I walk you through the trading system soup to nuts. Everything you see here, along with clear examples, will be available for you to follow. So these are the highlights here in the report. I talk about condition 1, continuation surging momentum, condition number 2, the cycle swings, and then condition number 3, peaks and troughs triggers. And for those of you who want to do it yourself, by all means, I would tap into some of Steve's recommended candlestick reversal patterns. Those can be great timing tools as well. And then you want to combine these together when they all fire up at the same time. That gives you the 3 green conditions or the 3 red conditions. You can do it. So I include in the special report the call option examples and put option examples as well. Now, if you're new to trading options, no problem. I've actually created a library of quick start videos that's designed to introduce you to the basics of trading options. So here's a lot of the topics that I cover: how to buy a call option, how to buy a put option, how to request clearance for different levels of option trading, understanding the option chain front to back, delta, gamma, some of the Greeks, how to close out your trades with profits, what kind of software, option trading software should you look at, also how do the underlying charts relate to options. And then I've also included an option position sizing calculator as well to make it really easy to know how many contracts you should buy in this case. So buying puts or buying calls, you can enter your account size and enter how much you want to risk in each trade. Then simply type in the different trade alerts that pop up over time, that recommendations that we make, and then it's going to auto-calculate how many contracts you can consider buying, and then the risk associated with that as well. And that's kind of a worst-case risk because we try to get out of losing traffic pattern trades before it uses up all the premium. Now, it's not always possible, but a lot of times it is. So for those of you who want to follow our traffic pattern alerts, we've created the Traffic Pattern Ultimate Alert in Real-Time service. This is sending out alerts during market hours. We track approximately 150 plus hand-picked optionable stocks that we really like. We send the alerts right to your inbox, or we can text message you on your phone. You get the symbol, the strike price, the expiration date. There's no gray area, and there's no guessing. We include the entry stock price as a reference, so you can see if you're busy on a meeting, if you're at work, you can see if the market or the stocks move very much. We also have the target. We have a profit target for every single trade that we include. And then for winning trades, once a trade goes our direction, we introduce a trailing stop as well. And my team, my team's asked to include additional trade alerts that they really like. So they're also going to post those up there, some of their favorite trade alerts that are I would say complementary to traffic pattern trade alerts as well. So that's included in the service. And this is all managed by my professional hedge fund research team working for you. We have customer service available always to answer questions. So this is a recent snapshot of the live to open trades. So you can see a lot of them this year have been red because of the markets have been absolutely getting crushed. So this is Pfizer example, and you can see here the way we track it. Now every single trade that we've recommended is in our trading log. I'll show you a snapshot of that. And you can see here, let me just get the pen out so you understand what we're doing. You can see this is a Philip Morris recommendation. The option cost $215. At profit target, it was worth $300, and then the trading stop, it was worth $265. So we use the max profit exit for tracking. That's a more profitable exit. And in this case, you'll see it in the last column, and I'll show you in the next page, of our tracking. So this is a case where the trade kicked out. And so the other trades will hit profit targets. We'll list those out as well. And then a trade has to become a winning trade for us to list the trading stop as well. So this is a list here of a recent snapshot of our recommendations. Now, the one question is, do we send out emails for exits? Only for losing trade exits. So right here, like for QQQ, this is a losing trade. So I'm sorry, that's actually a winning trade. Let me find losing. Right down here, this is a losing trade right here. So this one right here, we recommend it for RBLX to kick out because that's a trade that broke the traffic pattern failed, and in this case we sent out an email. This shows you the time and date, and then the value of the option to try to close out the trade and retain some of the option principal. So that's an example of that. But you can see here we do have losing trades, guys. So that's going to happen over time. Sometimes you can get a couple losing trades in a row. It's real world trading. Sometimes you can get a couple winning trades in a row as well. So here you can see McDonald's up 172. QQQ, another trade here that was up 173%. Bank of America had a nice put option trade up 211%. Nike had a nice one up 144%. And then up here you have a losing trade. This Canopy Growth, that was a call option, ended up being a losing trade. So there will be losing trades. Make sure you keep it real, guys. Understand that. Just like any trading strategy in the planet, you will have losing trades as well. And this was a snapshot a few weeks ago. We were up 6,900% for approximately 18 months of the service. We're now up over 7,000% on the service. So it's done really well this year. And here's the promo that we have. Now, normally the 6-month service is $997, discounted price today. The traffic pattern exposed is valued at $997. Intro to options on-demand videos valued at $650, and then the option position sizing calculator for $100. So all this normally is $27.44, guys. We've slashed that down to $495. So this gets you all of this above 6 months of access to the service, and this is where you want to go. You want to go to www.toptradetools.com/go. So that's where you want to go to take advantage. Again, www.toptradetools.com/go. All right, now I'll address one question that popped up, and that is, are there any guarantees? And there is actually. Let me just quickly go over that to let you know. Now, I've shown you 14 real traffic pattern trades I took in a Rainmaker period, and each one of those trades could have not only paid for 6 months of the service, but also for a year. So these are the snapshot trades right here. So a big trade can pay for, a $100 option can grow to $500, and you can pay for the service with a really big winning trade. Now, we use real hedge fund scanners and market analysis tools. We have one of the few trade alert services in the world managed by a professional hedge fund research team. It's almost like having your own personal research team finding the best trades, but here's the guarantee. If we can't find you 3,000% of winning traffic pattern trades over the next 6 months, you get an additional 6 months for free. Now, we're not worried about it. So the people who signed up, this is just winners, by the way. Losers are going to take away from this, all right? This is 6 months. Next 6 months, we've got to show you 3,000% of winning traffic pattern trades. And just so you know, people have signed up near the end of December of last year or in January of this year. We're up over 4,000%. So we're not worried about hitting that target. We're pretty confident we can do good things over time. Now, this is an example of a real trade alert. This is what we're after. We had all 3 green conditions fire off. We recommend the DIA. This is one that was a little while back, but that's where we're going to send you text message, or we can also send you that via email as well. Let me hit some questions. Thanks for your patience, guys. How did you do the last 3 weeks? Last 3 weeks, good question. I think we had a couple of winners and a couple of losers, but more losers. I think we have 3 call option trades on the board. One of them may end up being a winner. I think the other 2 are going to be losers. But overall, this year has been great. We actually had 22 traffic pattern trade alerts in January. So most of our big winners, I'd have to say, are probably on the short side on the year so far. The last 3 weeks, I think I would have to say a couple winners, but there's ones that are going to go off the board here. I think 2 of those I'm pretty confident are going to be losers, but 1 could be a winner. But overall, the year's been great. So we've had a lot of winners on the year so far. It's www.toptradetools.com/go. Let me just circle this for you guys so you can see this. This is where you want to go, all right? If you want to take advantage of the special offer, this is going off the board pretty quick here. We're doing this for Steve's group, guys, making this available. www.toptradetools.com/go. What is the cycle indicator that you use? Gary, you can really use anything. It's not really that special, to be honest with you. If you're interested in the cycle indicator, I'll tell you what, guys, just shoot us an email at support@toptradetools.com, and I'll see if we can get that to you guys. But we only have it for a few platforms. Okay, my customer service people are going to probably kill me for saying this, but if you're interested in the cycle indicator, guys, I'm happy to make it available to you. Okay, free of charge. So if that's something you want to track yourself, by all means, you can do that. All right. So again, I'm going to get in trouble with my customer service. Just say Mark said we can have the cycle indicator, and tell them the platform that you have, guys. It may not be a platform that we have, just so you know. We've got a couple of them. Now for this service, guys, you don't need to install anything. You can trade options with any broker, and that's the whole point, is you don't have any, there's really no brokerage software that you need to install. So you can trade it with Schwab, you can trade it with Fidelity or wherever you want, or IBKR, TradeStation, Thinkorswim. That's the whole point. We'll send you the email alerts, and we'll send you the text messages, but you don't have to install anything, if that makes sense. Could you walk through the alert that shows the price? So Mark, I don't have that on my screen here, but essentially it's the email is going to show you the stock reference price level and the price of the option. So it's going to say, for example, buy, like right now, I think the stock market probably is due for a bounce. So I would say if we send out a call option trade alert, it's going to tell you, for example, here's the strike price. Here's the price of the option, the strike price, the price of the stock when we publish the alert, and you'll have those reference price levels available. So if you're in a meeting, if you're out to lunch or whatever on the golf course, you can go back and do a comparison. Has the stock gone too far in the direction? Have I missed the trade? If you miss a trade, it's okay. There's lots of others coming down the pike. In terms of that, then we have the table. So Mark, what you're thinking about is once you get this, if you want to look at the live open alerts, I just showed you a snapshot of the table. You can log in. As soon as you sign up, guys, you get your login credentials. You can get access to the traffic pattern exposure special report. Don't take any trades that are up there right now, guys. Those are older trades. You're going to get a lot of new trades. We've had a lot of activity this year, and so don't worry about not getting plenty of action. You should have a lot of action this year. But we expect maybe 5 to 10 a month on average, but some months like January can get pretty crazy. Can you establish alerts? Chris, tell me what you mean by that. Apologies, I'm not quite sure I get what you're saying. Another question. Hey, Gary. Okay, what has I got you in that one? Hey, Kevin. Are these recent trades? So we give you all the recent trades on the log. We've been around doing this for about a year and a half, maybe a little over a year and a half, and we log every single trade. So every single trade recommendation that we've made, every single traffic pattern, it's all logged in there. Right now it's north of 7,000%. Now, understand we're using the max profit exit. What that means is if the trading stop makes 350% and the profit target 2 makes 300%, we're using the more profitable of the two. Okay, so it really depends on where you exit. It's a way to consistently track performance, but it really ends up being more of an ideal because your actual results are going to depend on where you get out of the trade. Most of the time, they're in sync. Sometimes you can get a really big winning trade where the trail ends up being a lot bigger than the profit target. So it really depends. But most of the time, they're in sync. Yeah, Bill, pleasure. Thank you. Appreciate that. Email and text alerts are both offered, Gary. So both of those are available. All right. Yes, I'm pushing 2 minutes over, guys. Any other questions? And Steve, thank you. Becky, thank you. And Jim, appreciate you guys having me here. If you have any questions, give us a call, 859-963-3445. And you want to go to www.toptradetools.com/go. Can you establish, AI alerts? Yeah, that'd be pretty cool if we could, actually. How do you limit your loss to $1,000? You don't spend any more than SuperDog. Don't spend any more than that in option. So my average risk would be the total cost of the options. So if the option costs $250, I'd buy 4 of them, trying to get close to $1,000 of risk. The option costs $900, I'd buy 1 of them. If it costs $100, I'd buy 10 of them. So it's just a way for me to normalize and try to keep my risk the same on most trades. I like to do that. That's a good way to manage your risk because you never know which ones are going to be the big winners. So I always treat every trade the same and try to manage my risk that way. All right, I think that is it, guys. There's the link. Excited to have a lot of you signed up. Join us. And if you have any questions, 859-963-3445. And we will be more than happy to return your call. If for some reason our customer service guys are on the line, you may go to voicemail. I promise you they'll get back to you at the very latest tomorrow morning, first thing. All right, Steve, thank you so much. Becky, thank you. Jim, appreciate it. It's always great to present for you guys, and I always enjoy watching Steve's different ideas on candlestick patterns as well. So I enjoy using the reversal patterns as a way to to track cycle turns is one of my favorite ways to use candlestick patterns, but as a quick side note here. All right, I think that is it for today, guys. Thanks for coming out, everybody. It's great to see everybody here, and appreciate everybody coming out. Be safe, and yeah, thank you, John. I appreciate that. Everybody have a great rest of your day and your week, and be safe in the upcoming weekend, and we'll look forward to seeing you at future presentations as well. Thanks, Mark. Appreciate that.